Welcome to Live Trading Profits this Friday. And if you're on YouTube or if you are here, I hope you enjoy the session. Now, what drama we have had. Absolutely interesting morning on both, on the indexes that I'm looking at. So I've got S&P 500 all geared up and ready to go for us. I've got UK 100. I've also got DAX 30, German 30 that we are going to be looking at. Now, if you have any questions, just pop them in and I will, try and answer them before we go. Now, S&P 500 is interesting. I've just put it up because, I think it's one of the more interesting charts to look at. Now, the thing you have to bear in mind with S&P 500 is that whatever price action that you observe and experience during before the US session opens, more often than not, still the same price action, but there'll be more drama. The size and extent of the candles will increase as well as the day unfolds. So this yellow block we have here, this is the open of the European session. So always mark that just for me to know where I am. And of course, if you had been trading throughout the Asian session, you would have experienced a small pullback bull trend right from here. Market just went up in a tight channel. Very hard to trade that, but it is tradable. But I'm trading the UK session, so let's have a quick look at that so we don't run out of time. So we had an expanding triangle open. An expanding triangle is just basically when look at the higher highs and higher lows and prices expanding. But within this expanding triangle, we had this micro wedge. Okay, price went up, came down, up, down, came down. So there's a key level here that the market was respecting, and that's at the price level of 4360. So when I was watching that, I kind of said to myself, well, let me have a look and see if we're going to break beneath the expanding triangle, which we did, and I see a bear candle, I'm going to sell. So there is a marker from MT4. I sold right here. Stop was above there. And very weak breakout, a very weak bear price action. So wasn't keen to add on at all into the trade. And when we got this reversal pattern forming down here, I exited the trade. It's a pretty good trade, got in out at 1-to-1. Then we had this reversal pattern. So as I go along through the day, I make notes for myself. Wedge MTRA is major trend reversal alert. At L1 equals L2 is leg 1, leg 2. So with this first leg here that we had, and this was a pullback. And of course, you expect the market to get to a leg 2 if the bears are strong enough. And at the leg 2, we created a reversal pattern. That's why I exited. Now, usually when I see a reversal pattern, I want to see a double bottom and then acceleration up, and I'll be buying at the first close above the EMA. I marked that in gray just for illustration here. First close above the EMA, but I didn't get the double bottom, so I didn't take that trade. I wasn't comfortable that this reversal pattern without being tested by a double bottom. So there we got a double bottom. Okay. Later on, we got a higher low double bottom. And if we had started going up, that would have been a trigger for me to buy. But because we didn't get that, I didn't buy that. And, while I was making my notes and preparing, we had this huge surprise bear candle. I actually went to my news to say, hang on, is there news? Where did that come from? Well, there was no news, but part of the reason of the bears taking over is that the bulls failed to create a strong reversal pattern here. So I'm glad I didn't take it. Otherwise, even if you'd taken that without creating a double bottom, guess what? You would have been pretty disappointed because you'd have been sitting with a losing position. So best trade of the day so far is this trade that I took from the expanding triangle breakout, leg 1, leg 2, got to the leg 2, closed out. We didn't get the higher low double bottom. And without a higher low double bottom, this acceleration is invalid. So I marked that just to show you. If out of here, okay, so there we had the high low double bottom. Bulls failed to accelerate, so there is a problem with the bull case. Bears are strong. We've come back again to the same level, and the bulls have tried to create another double bottom. They have failed. So now we have another wedge pattern forming in here. 3 pushes down, 1, 2, 3. It's a truncated wedge. So I'm not going to mark it. In other words, you can clearly see the 3 pushes. 1, 2, 3. But every time the bulls try, the bears come in. So I want to see what's going to happen now. If the bulls are strong, they have to accelerate off here, come back, still give us a higher low double bottom, then I can buy. So I'm not going to just buy because I'm seeing bull candles. There has to be a pattern, like we had that beautiful pattern there. So far, one trade from this morning. Another market, interesting. It's interesting, this expanding triangle that we have. This is a trading range open. Okay, when you see a trading range open, it's fantastic. There will be a breakout. Just have to wait to see the breakout and trade it. UK 100. We also had a trading range open. There is the first candle, inside candle, followed by 2 more candles still inside the first candle. So you expect that there will be a breakout, and hopefully the breakout will succeed and go to a measured move. So had a bear breakout, and I thought, okay, here goes the bears, and I sold beneath this candle, hoping to get acceleration down, and we didn't. And as soon as it started pulling back, I pulled my stop down and got stopped out. So there is the marker. You can see that marker from MT4. But then I waited to see what would happen. A second opportunity for the bears to sell off didn't trigger beneath here. And then we had this beautiful setup. I call this a higher high low 2. So from here, there was the first attempt to sell off. That's a low 1. First attempt to sell off didn't trigger on this candle. Then we had another second setup, beautiful bear candle, lower high. And I mean, when I saw that, I said, well, I'm going to take a chance with this because this is a high probability setup. If it had failed, fantastic. Put an order here. You can see the marker as well from MT4. Stop up there. As soon as it accelerates down, pull the stop down. And when we got down here, wedge bottom, 1, 2, 3. So this was a rush to test to create a wedge. And we got a reversal pattern. And I kind of held on a bit, thinking, well, the market might sell off a lot more, but it didn't, followed by another bull candle. So I exited out of that. So still a pretty good trade from there, decent setup. And then again, I put this marker for you. Had we come back and created a double bottom and then went above the EMA, it would have been ideal to buy the first close above the EMA. So gray shaded, I didn't take that trade. Because I got to say there's something wrong. Why have we failed to create a double bottom? Why aren't the bulls able to create a double and show strength? So you decide not to take that trade because something is not right, which is good illustration. We don't just jump into trades because things are moving up. So I let it go. And again, immediately we had this huge sell-off by the bears. Now, not a problem, good for the bears. So I'm thinking now we have a level of support here. I'm not going to rush to sell into the level of support. I want to see if the bulls are able to create a double bottom here. And we've had a weak breakout beneath it. Why is it a weak breakout? Look at the candle that tested the previous low. It's this one. The breakout candle is a follow-through candle, followed by a doji, followed by a low test candle. And we have just here, this break line, this week's low. So on a Friday, I put in my week highs and the week's low. So that's been a rush to get there. And no ways would I take a trade within here into a level of support, surprise candle. So if the bears are strong, there will be either they'll continue the breakout and give us a pullback, like we got here. So eventually got a pullback, good enough entry for us to jump in. So at the present moment, I'm going to wait and see. It's still only 20 to 1 in the afternoon, my time. So there's plenty of time in daytime. I want to see if we're going to get an opportunity to pull back, and where would you go? So if we pulled back and we tested maybe this breakout point, or if the pullback is deep and we come back and test this level, might happen now, might happen at the US Open. Any of these levels can be tested. So first options, if we get a pullback, I want to be able to see if I can get a test of the pullback. If the bears continue to sell off, give us candles like this, breakout and follow through, which we're not getting. This is a new candle, tails below, so a bit of a problem. Red line low of yesterday. I want to see the bears selling off with strength. Then we can have a pullback and happy to jump in into that trade. Now, I'll look at the daily charts just now. Other index I'm looking at is DAX 30. Man, what a complex open, huge bull candle. Okay, remember, we don't just trade because we see candles. So don't just see a candle, oh my goodness, I'm just going to jump in. You need a structure that you can then follow. With an inside candle, bears try to sell off, decent enough outside candle. So now I'm thinking, okay, the bulls were strong enough to give us a first candle at the open. That's fantastic. But they failed on the second and third candles to assert themselves. So half of the bull strength has already been erased. Bulls attempt again, and I thought, oh, maybe the bulls might come back. But if they had strength, they would need to give us a follow-through to convince the market that this is just an interim pullback. But then the bears came back again, and they erased more of that first candle and as well on the second candle. Bulls attempted to come in again, but we had another fail. So we got 3 attempts: first candle, second candle, third candle. So now I'm thinking, well, I want to jump into the market because I think the bears are beginning to assert themselves. When you have a trading range open, how many times have you seen a chart where you have a trading range open like this and then it just carries on like that the whole day? Very rare. Or I don't think you've ever seen it. The market may go up, come back, and have a doji for the day, or it may break down and come back again. So that is possible, but there is always a breakout likely to happen. So I'm trying to think, well, let me jump in. So I was waiting to enter live. Doji candle, not happy with it. I wanted to see the bulls just starting to come down a little bit more and see this EMA had been ascending, okay, to close beneath the EMA. And if I saw that, then I would sell. So I saw that close, decided to sell, stop still well up there. It was an acceleration, but the market went down sufficient enough for me to make profits. Had a reversal pattern setting up here, and I decided to get out. And again, this is the wedge pattern, 1, 2, 3. You always want to see a double bottom. If you get acceleration from a double bottom, and we had it here, then you could buy that. So that is just an illustration. First close above the EMA to buy. Do not buy that because you do not have a double bottom. So I'm kind of caught. While I was saying the bears are weakening and the bulls are weakening, give us a double bottom. We had this sudden surprise candle, no news, nothing by the bears. So the bears are still pretty strong in the market, but we're going to a level of support, and I'm still waiting to see if I get a double bottom. Didn't get the double bottom. So the market is bearish at the moment. So far, this looks like a spike and channel. When we say spike and channel, so there is a bear spike. There is a pullback. So we are already within the zone, whether using the bodies or using the actual length. I think at these levels, or not I think, what I'm looking to see, to buy, I need to see that double bottom. If I see that double bottom coming up and acceleration above it, then I'll be buying. Okay. UK 100, we've just spoken about. If the bears close, we've got a few seconds to go beneath here. I'm going to wait for the pullback to see it to go. Get a pullback to test this breakout area and sell. Not wise to sell into a level of support, so didn't do that. S&P 500, classic example of you don't want to sell into a level of support. So if it's sold here, you'd be struggling out with a decision. Very quickly before we all Cool. I got a lot of stuff that is in here. I'll just clean that very quickly, just to talk about what's happening. I should have been more careful when I was doing this on the 5 minutes. But no problem. So what I want to talk, just explain is, if you've been in the market, yesterday was a big day. I mean, the last 3 days, Monday, Tuesday, Wednesday, trading range behavior, market very choppy, hardly any momentum, and then sudden burst. And that's because after this huge bull climb, this market has been deciding what to do, coming to a level of resistance, which is the high of October. So this outside candle probably means that there's a lot more bears in the market. So, if you don't see any opportunities, like I did earlier on, just wait. The opportunities will come. There is no need to rush. If the bears are strong, they'll create another sales setup to accelerate down for us, because we're at a level of resistance. But do not forget huge bull move for 3, 4, 5, 6 days. So whatever the bears do, the first option for them is to see whether we can test this 10 EMA. So we might have a huge candle and might just bounce off this 10 EMA coming up. Isn't this interesting? We're just talking about, don't just go in and sell because you see bear candles. Level of support here was breached very weakly. So now let's wait and see how strong the bulls are. If they're strong enough to accelerate up, they have to give us a double bottom. To get the double bottom, we just buy and see how far we go. On the daily, okay, outside candle, I'd mark this. We have an expanding triangle. In other words, higher highs, higher lows. If we have an expanding triangle, the market might want to rush to test that, which is what we have as this week's present high. Just above here, we have the high of last week. We are exactly, we just breached what was the low of this week. The low of last week is still quite far away. So if the bears are strong, they want to accelerate down and create a huge bear candle. But because we have this expanding triangle lows here, this could be the low of the day if they're able to give us at a higher low double bottom we're talking about, and then accelerate up. Finally, on DAX. Again, do not rush just to do something because candles are flashing before you. Let's wait. So I'm not going to worry about cleaning that for now. Potential wedge top. Market went up. It's gone up again. Might come down. Might want to go create a wedge top, which will be a reversal pattern for the bears to come in and sell off. If the bears are strong, they're going to continue to sell off and test the low of yesterday, and maybe go down as far as they can to test that rise in EMA. So a lot of exciting stuff. If you've been in the market, you might have picked up a couple of points. But the trading range open, I think that's the key message, always ends up with some breakout of sorts. But do wait for the setups. Thank you, guys. I have run over by a few minutes, but I've thoroughly enjoyed it. Marlon, thank you, boss. Everyone, enjoy your weekend, and we will see you all sometime next week. Take care, guys. Bye.